everyone. I know we've been sitting for quite a while, so I'll try and move this along because I'm sure we're all getting a bit anxious for a light lunch. Karen, earlier, our first speaker, started things well. She laid out some groundwork for me, which I'll go into detail. And Eleanor laid out some groundwork for me too when she talked about care and self-care and changing the wording. I'm going to be giving you guidelines on self-care and care for money. So hopefully how to get more money in your pocket if you're a caregiver, how to get more money in the pockets of the seniors that you're taking care of. And yeah, so we're going to go with certain forms that I've got here. I'm going to show you what the important aspects are. And we'll be open for questions at the end, as was mentioned previously. One of the things I'll tell you first about me, though, just to give you a bit more detail as to why I'm here probably and how I met Mary. I met Mary at a volunteer gathering and where she was promoting, so it's got to be within the 10 years, Caregiving Matters. And I was a volunteer with Doan House Hospice. I don't know if anybody's familiar with it, but it's located in Newmarket at Eagle and Yonge Street. And I was a volunteer there up to 2 years ago. I was a volunteer for 22 years. And I did just about everything within there, from being on the board to being a visiting volunteer offering respite care for those that were diagnosed with terminal illnesses. And my last stint as a volunteer, I was a bereavement facilitator. So I've gone through a lot of the stages of my volunteer experience that you're going through now. But my true passion is probably numbers. I've been doing it for a lot of years now. And that's what I want to share with you today. Also, I've never really been a long-term or a long-term, even a short-term caregiver. When I was in my 20s, my parents divorced. They found the right partners for them. When my father was diagnosed with cancer, his wife was there constantly with him. She was his main support. And with my mother, she had Alzheimer's. She had it she was diagnosed almost 10 years younger than what I am now. When she was diagnosed, her husband, Bob, kept her at home for 8 years. He kept her as long as he could. Then she went into a long-term care facility, and he went there every day to see her, and she was there for 6 years. So I know what you're going through, but I really don't have all that, I'll say, emotional investment that all of you have. And I can understand how difficult it can be. And as Eleanor mentioned, overwhelming is a very good word for all of this. So I'm going to start with the first item that's in their green file folder. And this is called the disability tax credit. So the disability tax credit is a credit that if you complete this when approved by the CRA, Canada Revenue Agency, it will allow a disability amount to be applied to the person who has the disability tax return to help reduce any tax that is owing. And to fill out this form, it might look challenging, but if you're helping someone do this, or the person who has the disability can do this, there's only the one section you have to be aware of, and that's the very first page, okay? And this is to be filled out by the taxpayer. So what you're doing, the first part is the person with the disability. You're identifying them, the social insurance number, that type of thing. And the person claiming the disability amount doesn't necessarily have to be the one with the disability. It could be a spouse. It could be a caregiver. You don't even necessarily have to live in the same location as the person that you're caregiving for. If the disability credit can't be used, first off, by the person with the disability, the amount or portion of it can be transferred to a spouse, caregiver, a daughter, son, granddaughter, grandson, and if you owe tax, it can be reduced. So this is the part that the individual fills out with the disability, or a legal representative that can submit this to the government. Then what happens next, all these other pages except the last one are completed by the doctor. So the doctor is the one that determines whether or not, if this is a disability that might fall under the guidelines of the government. So the first one, the page, it has to be filled out by a medical practitioner, but what's interesting is how this has changed over the years. So now, and I think it was Karen who talked about the various disabilities. So one of them is vision. This form can be completed by a medical doctor, a nurse practitioner, or an optometrist. Speaking, a medical doctor, nurse practitioner, or speech language pathologist. Hearing, medical doctor, nurse practitioner, or audiologist. Walking, medical doctor, nurse practitioner, occupational therapist, or physiotherapist. So they really expanded those that can help you apply for this disability credit. Before it was a medical practitioner, and just over the years they've been, as I said, expanding on this. Sometimes it's tough to get into your doctor. It's tough, if the doctor retires, which so many of them are right now. You've got other resources to help you do this. For eliminating, bowel and bladder functions, medical doctor or nurse practitioner. Feeding, medical doctor, nurse practitioner, or occupational therapist. Dressing, medical doctor, nurse practitioner, and so it goes. So this is what the doctor will fill out. Then it is up to you to submit it to CRA. The doctor does not do it. So I'm going to suggest to you that you photocopy it, at least one photocopy, and you send it by registered mail to the government office. Some people have tried to send things by fax. I know I work with CRA, Canada Revenue Agency, almost on a daily basis. Never fax anything to them. If you send a 7-page fax and they only see that they have 6 pages of that fax, they will throw it out. They will not contact you. They will not let you know you did not receive it all. So I always recommend send it by registered mail and make sure you have a signature on it. Because when it comes around, they say, no, we didn't get it. You can say, yes, we did. We've got this and that. It may not help to some extent, but it will help you if you have to fight for maybe interest that you should have been receiving because they didn't process this in a reasonable time, or the fact that a number of years, you can go back maybe an extra year if you have to resubmit it. When you submit this to CRA, it will take them approximately 6 months to process it. Yes, I know. It's terrible. It's just terrible. But the one good thing is that you can actually go back 10 years for your credits. So when you fill out this form, or whoever fills out this form, make sure you tick this box that says CRA, make the adjustments. Because they will go back. So if your doctor said, if this is all new to you, and if your doctor says, or for the person that has the disability, yes, I verify that this person has had the disability since 2014, let's say. By indicating here you want the CRA to do it, the CRA will go back to the tax return of 2014 and all those going forward and make that adjustment. If there is tax paid, whatever that adjustment is for that time, they will send the money to you or to the person who is claiming or accessing, I'll say, the disability amount if it's being transferred. So they will send, if it's not a direct deposit, they will send individual checks for each year. So that is why that is extremely important. But to give you an idea of what kind of money you're looking at, and the reason for the transfers, it's a credit. It's not refundable. You can't say, you know what, this is what the value is and I'll be getting this money. If there's no tax payable because it was a low income earner, they're not going to get any money, but that means the whole amount could be transferred to somebody else who does have a tax liability. So in 2017, the maximum disability amount was $8,113. What that means converted into our real dollars would be $1,217. So you could get a check for $1,217. When you start adding it up, if you went back to 2016, it's $1,200. 2015, $1,185. 2014, $1,165. So you're talking $5,000–6,000 right there on something you may not have realized is available to you. Is this new to some people? Yeah.
Isn't it the POA that will have to do this? Like the person that they...
I'm going to get to that. Actually, that's my next item. Okay. So the lady in front here asked if it was the responsibility of the POA. So that's the power of attorney, which is my next point here. So there is Eleanor mentioned there is different powers of attorney. So there's power of attorney for health, which is also called personal care, and there's power of attorney for property, which is, I'm speaking from, in this case, finances. So bank accounts, that type of thing. So if you have a non-continuing power of attorney, covers your financial affairs, but can't be used if you become mentally incapable. Let's say you need someone to be able to handle your finances, or with seniors, sometimes they have the passbook that they like to take to the bank and put it in the machine, or have the teller update it and things like that. So that is a short-term power of attorney. So that's a non-continuing. Where the continuing power of attorney is the power of attorney when it could take effect as soon as the paperwork is signed, and also and if you become, or the person you have power of attorney over becomes incapable mentally, then it just continues. So there's no stopgap in it. So when you mentioned about a power of attorney signing that paperwork, it should be signed, but there's another form that can be used, and it's called a T1013. You Google T1013, and it's authorization for representation. So if the person with the disability is mentally capable in making sound choices, they can fill out that form, sign it, and within about 4 weeks, then that's one of the faster turnarounds of the government, right? You submit it to the government, and you'll get an acknowledgement that, that this person has, let's say you, has been now authorized to represent the client, is what you're doing. So there is that. If you have a power of attorney, and this is more along, I'm just giving this to you from experience of what I've dealt with, but dealing with powers of attorney, I always suggest you speak to a lawyer. As I said, you can Google a lot, but when it comes down to your specific family or friends' needs, I'm not assuming all caregivers are dealing with family. I'm looking at caregivers as taking care of good friends, people they've known for years, two widows or widowers that, have just, are helping each other out as they age, type of thing. So you can do that. Okay. Next item, number 3 of the 10, tax returns. A tax return must be filed each year, and it really has to be filed on time. You might get away with it once if all of a sudden, you became a caregiver, thought, it's the middle of April or the end of April. There's no paperwork on the tax return. Okay, but you really have to file the tax return on an annual basis. They will penalize and charge interest if you don't. And what'll happen is if you don't file a tax return, so let's say in 2017 you didn't file a tax return until, let's say now, for someone, or they didn't file it themselves. What'll happen is starting in July of this year, July of 2018, they would have stopped receiving their credits because the government bases the credits on the tax return. So we're talking the GST, we're talking the Trillium, the Ontario Trillium Benefit Fund, the Trillium Drug Program, but that's if they're a senior but under 65, the Federal Government Income Supplement, Guaranteed Income Supplement, which I'll talk to more about that, and the Ontario Seniors Homeowners Property Tax Credit. If you don't file, you won't receive them. They can add up to a lot of money, okay? And you have to keep your returns for 7 years, all the paperwork for 7 years. Okay. Next, the federal income supplement. This is for lower income households. So what you do, so if the person you're caring for or yourself receives old age security, so you have to be 65 or older to receive old age security, you can apply for the guaranteed income supplement. And as I said, it goes by household income. So if there's husband and wife, it's the combined income. If it's an individual, it's based on what their total income is. If they receive a death benefit, it doesn't come into consideration. I'll just do this. I think I've got one here. Here it is here. It's this form. It's a very straightforward form to fill out. But again, with all the stresses that are going on, if you're the caregiver and you're having to put out money, whether it's for medical or taxis or anything else, and there's money that could possibly be received from the government, you want to take advantage of this all the time. Okay. Now, for those that so I've been talking about those that are the seniors or the one you're caring from. There's also a caregiver, a Canada Caregiver Credit, that goes by CCC, that came out. It started effective started in the year 2017, so it's fairly new, and a lot of people didn't realize this. And I'm going to read this because there's a lot of detail in it, and I don't want to miss anything for you. This replaces the Family Caregiver Tax Credit, the Caregiver Tax Credit, and Credit for Infirm Dependents. For seniors, the Maxi Canada Caregiver Credit was $6,883 in 2017 and is indexed for inflation for 2018 and going forward.
Sorry, how much was it for the year?
$6,883 in 2017 is indexed for inflation for 2018 and going forward. The amount is reduced dollar by dollar by the dependent's net income over $16,163. So if the income is $17,000, you're looking at $827 it would be reduced by. But again, this is something that would come to you as caregivers, not to the person that you're caregiving for. So I want you to be aware of that. In some cases I've seen when let's say a mother, I think of one of my clients, when a mother who's 80 is living with her daughter and husband and family. And so they are the key caregivers. This is when they would apply this on their personal tax return. And this is how this is done. This is done on your personal tax returns. If you're preparing, in my case, my client's mother's tax return, and also I'm preparing my client's tax return at the same time, that credit gets transferred because I'm showing the mother as a dependent. So it's nothing you send into the government, it's something that's submitted with your personal tax return. So another item for you as caregivers is the employment insurance family caregiver benefit. So through employment insurance, so if you're working and you're paying EI, it's being deducted from your paycheck, you can potentially get paid on a biweekly basis from EI as being a caregiver. So again, more details, so I want to make sure I want to read this to you. Through employment insurance, you could receive financial assistance up to 55% of your earnings to a maximum of $547 a week. These benefits will help you take time away from work to provide care or support to a critically ill or injured person or someone needing end-of-life care. Family caregiver benefits for adults, maximum weeks payable is up to 15. So let me say that again. Benefits for adults, family caregiver benefits for adults, so you're talking about a senior. let's say your mother falls and she has a hip injury, right? EI will pay you up to 15 weeks. Compassionate care benefits, maximum weeks payable is up to 26. This is for a person of any age who requires end-of-life care. You can receive benefits during the 52 weeks following the date the person is certified by a medical doctor or nurse practitioner to be critically ill or injured or in need of end-of-life care. You can take the weeks of benefits within this time frame either all at once or in separate periods, which really helps if you've got someone else in the family that you're going to kind of swap out, take 2 weeks here, 2 weeks there for somebody else. So to be aware of that. And it defines a caregiver as a family member or someone who is considered to be like family. So if you've watched out for your neighbor, for the last 10 years or something like that, you have a key to the neighbor's house, you have meals together, or you help do the shopping or whatever the case, that is equivalent. That's the way the government will look at it, as being an equivalent to a caregiver, and you don't have to be a family member. Family members includes immediate family as well as other relatives and individuals considered to be like family, whether or not related by marriage, common law partnership, or any legal parent-child relationship. And you apply, applying is done through Service Canada. You could go to, my office is in Newmarket, so I really only know where Service Canada is in that area. So there's a Service Canada office at the corner of Green Lane and Yonge Street. They're all around. So item number 7, if you have a power of attorney and you are a power of attorney for property and you're paying for expenses, you're being reimbursed and so forth, make sure you keep all your receipts. Maybe even a small book, a journal of everything. If you're reimbursing anybody for any expenses, make sure you have those receipts. And I'll tell you a story. Yeah, it was about a year ago. I get a lot of my clients from lawyers, and what they have is, in this case, the story I'm going to tell you is called a passing of accounts. So what happened is this lady had a power of attorney right from the beginning for her mother, who was physically incapable of doing her banking and so forth. She was mentally very alert. Physically, she had numerous health challenges. She had she had full-time caregivers. Her daughter kept her separate residence. And the daughter did her best on trying to keep expenses down. So when the wheelchair access from the driveway to inside the house, it was a lift, like an elevator, had to be repaired. She paid for it in cash. Probably, I think it was around $4,000 to $5,000. The driveway needed done. She paid for cash. She was trying to, the underground economy, she was trying to avoid paying the HST. And I understand. But she did everything. She took her mom to all her doctor's appointments. I think that she had 8, 9 doctors she was dealing with on a regular basis for all her mother's health injuries. Everything was fine. And every once in a while, her mother would give her some money for the gas, for the running around, for the inconvenience. This lady, the daughter, was a teacher. She quit her job to take care of her father, then passed away, and then her mother. So what happened, the mother died, and then the son, or the brother of this lady, came out of the woodwork and said, and he was in the will. So he was in the will, and he was to get a certain amount, and the daughter, who the caregiver, she was supposed to get a certain amount. And part of that was, I'll say 50, the easiest way to explain this is 50% of whatever the cash was for that was left afterwards. He initiated a lawsuit and said that this monies, she depleted the estate. She spent his money. And he hadn't been involved with his mother or his sister for 8 years. But once she passed away, it's awful what people do on the death of somebody. And it's like they come out of the woodwork. Sometimes they're vultures. But this is what happened. So the lawyer contacted me. I met with his client. I actually worked for her, not the lawyer. And passing of accounts means we had to go back 10 years, almost 12 years really, to move to track. This is what I do. Had to track all the finances for 10 years. What went through her mother's account, the numerous investments that she had when they were rolled over, how the money was spent, the doctors that she'd seen in certain years. So she had to do all of that because of a lawsuit that was brought out when she had the power of attorney all along. And her mother was of sound mind right up until the day she died. So trying to get statements from banks, trying to get canceled checks from banks going back that many years, the cost involved, the time involved, and with lawyers, especially if you're going after something, they want things to move along quickly. So it's really important for you to keep all your receipts when you're taking care of somebody and you're spending their money, even though they've given it to you, right? You want to make sure that they have the receipts, you keep the receipts, just make sure you have that because you never know what may come back on you, whether you have a power of attorney or you're just a friend trying to help out. You never know what's going to happen.
What's the end result of that, do you know?
It's still in front of the courts, and this has been going on for a year and a half. Over a year and a half. I finished, excuse me. The question was, the question was what were the results? And I'm saying I don't know. The last I dealt with it was probably in June. I'd finished everything. I did my analysis for the lawyer. And I don't know what's happened since then. And they may not tell me. I don't have a right to know. It's not that they need to tell me, but it's pretty sad. Okay. I'm going to tell you, work with trusted advisors. And I know we all say that, but there's so I'm saying bank manager, financial planner, tax preparer, lawyer, insurance agent. They're all very important. For so many reasons, but you want everybody on the same page because you're doing this planning as you go along. But one of the things is, and I'm not saying this to look for business, I'm saying this because this is very important. When you sit down, when you're a caregiver, do have your parents or whoever you're caregiving for, see if you can have their tax return also if you're in that position. And the reason being is those credits that can be transferred if it's been set up correctly. But sometimes people don't realize that there are the credits. You don't realize that, if you have a conversation, don't just, drop off your file if you're a caregiver and drop it off at H&R Block or Liberty or BDO. I'm just saying, have a conversation at some point when the tax returns are being prepared, so you can say, yes, this is what the state of my mom or my father or my brother, whatever it might be, because they may say to you, well, you may be eligible for they may be eligible, or you may be eligible for the disability tax credit. You can start that conversation too if you don't really. This is a lot to take in, and if numbers aren't your thing, it just may kind of go by the wayside. But I think it's always really good once you become a caregiver to talk to whoever's preparing your tax return, get some professional help on it, and then move forward from there. Okay, the two more things and then I'm finished. Fraud and financial abuse. There's a lot of door-to-door sales fraud going on. People who will show up and say, your gutters are plugged. Let me, I can, clean out your gutters. It'll only cost you $500. Can you give me a check? Can you give me cash? I can do it right now. And seniors are very vulnerable. They're very vulnerable to this. They think, oh my, I better get it. I can't have the water backing up, coming through my roof, down to the basement, that type of thing. So, and if the senior is of sound mind, or maybe not, make sure that they either call you or call somebody else before they hand over any money. Call a neighbor. If you can emphasize, don't do anything right now. If you can emphasize to them, just, I'll think about it, leave me your card. Okay. Another one is the telephone calls, supposedly from CRA, asking for money. That is huge. I've had clients call me, and really, I could almost feel them shaking through the phone. They said it sounded so real. They're going to come to my door. Do I owe any money? And it's a real scare. I don't know of any of my clients that have actually paid out. If they did, they haven't told me.
My best friend just did about 2 months ago, $3,000.
Yeah, it is terrible, and they sound so real. And they say, you know, we're going to be at your door. Well, the CRA does not come collecting at your door, right? They have other ways of getting your money, especially if you've got old age security or having other benefits. They'll claw those back if it comes down to that. So you have to be really aware of that and make the people that you care for, if they are answering the phone or answering the doors, to be skeptical, to ask whoever calls, ask for the contact information. Then, you know, look up the phone number for CRA or give you a call and say, this is the number that they gave me. And if it's not the government, and don't call the number back, because they will say they are the CRA. So you have to call the government office saying, is anyone trying to contact me with regard to some outstanding issue? And, you know, if you go to the CRA website, it'll say, yes, have them log into my account. And I mean, how many seniors want to log into, if they've even set up my account on the CRA website, can do that. And the other thing is, I am very cautious with my senior clients about, CRA wants to be able to send all their notifications by email now. I get emails and I can't even tell sometimes. I have to really look at that link at the top to see if it's really a CRA website. And I know that, as I said, I deal with the CRA on a daily basis. So I'm going to ask for anyone who's dealing with seniors, let them keep getting their paper information. Let them keep getting those brown envelopes that really say what's going on, because you can be so deceived by those emails that come through. With CRA, if you do sign up for online email, or sign up online, yes, for online email, they will send you just a note saying you have mail, right? And you have to log into your account to get it. It's very cumbersome. You caregivers, you've got enough on your plate. Don't mark that off in the tax return. And last thing, number 10. I know this can be very dry, so I tried to find something humorous with a number in it, just because I do numbers, okay? So this is taken from, I'm almost on time. This is taken from eldercareissues.blogspot.com, and it's called a caregiver moment number 12. Arguing for 30 minutes to get your loved one to wear matching socks, then realizing you went out with your own shirt on backwards. Do you have any questions? Okay. So last page, just to take a look at, these are some statistics. Didn't realize I'd thrown that in. And it talks about the men and women, the percentages that are working past the age of 65 because of needing money. The good thing is that the proportion of seniors who live in low income is down from what it was. And the proportion of seniors who reported having any type of debt in 2012 is 43%. That is huge. And that's up from 27% in 1999. So pay attention to the finances, yours and those you care for.